Good day, Tom Germann, sales representative at Apex Results Realty located in Burlington, Ontario. I operate from Grimsby through to West Mississauga. So, you want to get involved in real estate. You want to trade in real estate. Awesome. Again, these are a lot more informal. I'm not scripting this, I'm just talking about relevant topic. With time and a bit more practice, I'm likely going to be redoing all of these. But right now the topic is budget and bank accounts. A lot of the realtors I'm meeting today, we're getting in, have done some sort of business on the side or in past and have the knowledge about how to keep business separate from private. Not everyone does. I'm still meeting people, of course, who have jobs, 9 to 5, salaried, whatever. They're not contractors. Realtors are contractors. It's important to realize the difference. So, here's the mistakes I made. First year in, did a transaction, money comes in. Whoa, I have to pay taxes. I'm smart. I had previously run a small business. Very small, just web. So I knew the basics. So I took the money, put it into one bank account, which was an old business one, and split it. This is the tax money. This percentage goes to my business, paying office bills and everything else, and this much comes home. Something like almost 40% of the money came home. Now, if you have a $10,000 commission and you say, awesome, I'm bringing $4,000 home, you may want to look at that. I will talk about that more in depth later on a separate one, but this is just something I want to cover quickly. Budgeting, knowing what you're spending the money on. Where is the money? What is the money? A $10,000 commission comes in. If you simply have it going into the family account, we have 2 business accounts, or rather we have 2 family accounts. We have a checking and a savings, so I should put it in the checking account. And what will happen is the line between business and private will muddy. So at the end of the year, you look back, you know how much money you've put in, but you've only got a little bit left because that was operating money. Now you have to be able to track your expenses. You have to be able to track what things are being spent on, and the taxes, because you're also collecting HST. And there's a good reason to collect an HST. I'll leave that alone for now. It's irrelevant in this. With the budgeting, it's not so much I'm sitting down and creating a budget. For myself, and what you may find a little helpful, the second you get a commission in, go to the bank and open a separate bank account. Do not go to whatever you deal with as a family. Go to a separate one. Open an inexpensive checking account. That's all you have to do. Get a credit card. If you do a lot of credit card payments and debit payments and so on, at the end of the year, you can turn around and say, these are my Visa bills, these are my receipts for paying cash, and here are my bank statements. It will make it much easier for yourself for bookkeeping purposes, and everything goes along with that. For me, it makes it easier. It's not a perfect system, but it helps. So then you have some very clear lines. Now, whether you bring all the money home or however you do that, again, there's a clear break between the business money and the family money. Second thing, a spreadsheet. I don't care if you use a book. I don't care if you use line paper. I'm not really concerned if you simply use Excel or something like that and you type it in. Have a breakdown. What percentage do you consider going to taxes? Yes, you have wonderful deductions, lots of them, painful deductions. You also have the bare minimum you have to earn first as a realtor before you're seriously getting to paying taxes. But the best thing to do is set, I will put a percentage away of every transaction to tax every year. If I make a $10,000 commission, I put $2,500 into that. Now, also, you have to break out the HST and make sure the HST is there. As I remit, Government of Canada wants their money, they can have it. It is sitting there. I've not spent it. It just sits in an account until they say send it in. I have no problem with that. All right? So for yourself, I recommend having one account. It is easier to track it. Money does not sort of get all blurred and muddied and somebody went out and did some things and suddenly there's no money in the account. Because one of the ways that you can get into trouble is when it comes for tax time and you file and you made 40, 50, 60,000, $100,000, and you've had your expenses, but there doesn't seem to be that much money left. You've taken your, like, the family money and the business money, it's all tied together, and suddenly you don't have enough to pay the taxes, so you don't file. And then next year, same sort of thing happens, and you don't file because you know, I've had it done, you owe $8,000. And it will make it tight with everything else going on. Now that translates to, in 3 or 4 years, suddenly you owe a lot of money. It happens everywhere with contractors. It's about money sense. It's about having a budget and saying, this is how I do it. So I wouldn't open up a bank account immediately. I would wait till I have a lump of, like a commission. Not necessarily the least commission of under $1,000, but if you suddenly have an amount come in, a decent sized commission check. I took a nice person out, first time home buyer, we bought a $200,000 property, $5,000 commission. Open up the account, put the money in, let it sit there. Run the expenses out of that. Because at year end, when it comes time, you'll be able to say, this is what I spent the money on. And for the topic of actual budgets, it will help you stay on track because it is not difficult to pull out at that point if you have a separate account what you're spending the money on. When you budgeted $300 a month for mailouts, $100 for website, $75 for coffees, or maybe a casual breakfast with a few good clients you have, and this is leading to business, it's fine. But then you can pull out other things, like the $500 in meals that you spent when you were just sort of out and about. Now, at the end of the year, when you look back and say, oh, and you start thinking about it, because when you catch yourself going out for a meal or whatever on your own, or with the wife, and you, oh, I've got to pay it this way. And you do, and it will happen. You can look back and say, all right, you know what? I'm eating out a lot on my own. I see a lot of this restaurant or this fast food. So with that, you can then adjust your spending habits and take into account other things. Pack your own coffee in the morning. In the US, after the credit crunch, not many people were taking Starbucks every single morning. The big caramel, whatever, that costs $9. A lot of Americans discovered I can just go with a basic coffee from home and that meets all my needs because I'm scared about losing my house. Same thing with you. It is very easy to run off and get yourself coffee every day, 3 or 4 coffees a day, socializing, frittering money away on this. Is that money you're spending bring you anything back? What is the return on it? You go out with some good friends, you buy their coffees, and it's a business expense. They know you're in real estate and they will never use you. Perhaps you can adjust where you're going, where you can rotate who pays. These are things you need to be aware of because it's too easy to have a good year or two, to make a lot of money in real estate. And all you have to do is look south of the border. In the US, it happened a lot. People made so much money, it was not funny. And what happened? Credit crunch, and I believe 25% of the realtors are out of real estate. They could not make it. With a budget, you know what you're spending, you can see your money coming in, you can look back and track it historically as well as in the moment what you're doing, and you can make sure you're protected and you have enough. Because with a budget, if you ever hit what I call the drought, I haven't done a transaction in 6 months. And that happens. It definitely does. What do you do if something happens and you're taken out of the equation for a year? Do you have the money put aside because you had 2 or 3 good years? I can't work. Hit by a car, I have to focus on rehabilitating myself. Sickness in the family, I have to be Mr. Mom or Miss Mom. I have to do this. You have to do that. Do you have the money put aside because you budgeted for it? If you did not budget for it, you are going to have a problem. I've been through the 6-month drought. I have seen realtors hit by vehicles, injured, trying to rehabilitate themselves, and saying, oh my gosh, I normally make my money. I haven't made any money in 3 months. That tells me you have to have savings put aside. That's a higher end function. There's a lot of people out there, financial planners and so on, who talk about this, who pass on lots of great information. I'm not here to talk about that level. I'm talking about budgeting. The budget is not just today and historical. It also tells you where you're going in the future. And if you can look at that and say, you know what, I have, to cover my business expenses, I have 2 years covered now, you can most assuredly relax a little bit, and you can focus on other things. Every realtor, to actually make money in this business, should be buying real estate. Anyway, that's it for now. This is not my best topic ever covered. A little bit of a rush, things are going on, but I wanted to get some more stuff done. You have yourself a great day. Good luck, stay positive. You can do this if you're cautious and if this is the right business for you. Take care.